Welcome back to Investing Talk podcast. Today, we're taking a look at a question that's probably on quite a few minds. Is Sharplink Gaming a good time to buy right now? And this one's definitely not your typical stock, as you'll hear pretty quickly. And it presents a really unique case for investors, challenges a lot of sections. Before we really unpack all the fascinating details here, if you find our analysis insightful, please do consider hitting that subscribe button, maybe liking this discussion and leaving us a comment. Your support genuinely helps us bring you more of these explorations. And hey, if there's a specific company you'd like us to look into next time, just drop it in the comments below. We'd also be incredibly grateful if you considered buying us a coffee to help fuel these explorations. Okay. Let's get into Sharplink Gaming because, wow, it's undergone such a radical transformation. It completely changes how we should even think about it. It's a story of a pivot, really. So profound, it sort of redefines everything: financials, competition, the works. Makes you question what a public company can even be these days.
Yeah, what's fascinating here, I think, is that Sharplink Gaming has fundamentally shifted its business model. I mean, almost in a way you rarely see.
Yeah.
It's really not primarily a gaming tech services company anymore. If you just looked at its current structure, you might not even recognize the original business. Its core value proposition is completely changed. It's now basically an institutional scale holder of Ethereum or ETH. You can pretty much think of Sharplink Gaming now as a publicly traded proxy for large-scale ETH exposure. It's not just tweaking things, it's a total metamorphosis.
That is a huge shift, like fundamentally changing from a gaming company to basically a crypto asset manager on the public market. It almost sounds like they went from, playing the game to owning a big chunk of the casino itself, the Ethereum network in this case. So the obvious next question for any investor has to be, how has this completely reshaped their financial health? What do the books look like now?
Right, and if we connect this to the bigger picture, their financial statements tell a very clear story, especially looking at the Q2 2025 10Q. It's clear, but unusual. The main driver of its balance sheet, and really almost all future earnings potential, it's not gaming tech innovation anymore. It's the performance of ETH prices and any yield they generate from it. Traditional gaming revenues are now a much, much smaller slice of the pie, almost negligible, really, in their overall financial profile. Their financials mostly show gains tied to accumulating ETH, maybe some staking yields, rather than consistent operating profits from the old business.
Yeah.
So that an investor looking at their income statement is basically seeing an Ethereum performance report, not a gaming company's operations.
That's just radically different from how most public companies create value. So can you give us some specifics, like how much ETH do they actually hold, and how does this new, very asset-heavy balance sheet look in terms of stability?
Absolutely. So as of August 24, 2025, Sharplink Gaming reported holding a, frankly, staggering 797,704 ETH. Just to give that context, that's a very significant amount for any single public company to hold on its books. And they've also recently raised quite a bit of capital, about $360.9 million through equity offerings, specifically to fund this ETH buying strategy. Now, what that means for financial stability, well, their balance sheet suggests pretty low debt level and high liquidity, which is good. Cash flow reflects both, any ETH activity and these big equity raises. But, and this is the key thing, the sheer size of their ETH holdings compared to their total liabilities is quite unusual. It makes the company's value overwhelmingly dependent on the fluctuating price of Ethereum. This isn't just standard treasury management. It's a very, very concentrated bet.
Okay, so if their balance sheet is basically just a reflection of one single, very volatile digital asset, and earnings are tied to how that asset performs, what does this mean for valuation? Traditional metrics must be completely useless here, right? How do you even start putting a price tag on a company that's essentially become an asset manager for just one digital coin?
That's a really critical question, especially for anyone used to standard financial analysis. Your traditional valuation ratios, PE, PS, price book, they aren't really meaningful in the usual way. For anyone thinking about a PE multiple, well, Sharplink's E, the earnings part, it's now largely driven by volatile ETH price moves and yield. So any PE ratio you calculate is probably reflecting market speculation on Ethereum itself, not the company's operational skill. It really needs a mental shift from business analysis to asset analysis. The market seems to be valuing Sharplink mostly as an ETH proxy. Its stock price is heavily correlated to the ETH spot price, almost like it's a derivative itself.
Right. So comparing it to other gaming companies or even tech stocks would be just fundamentally wrong then. We shouldn't even be looking at peers in those sectors.
Precisely. Yeah, the comparison would be like, I don't know. Doesn't make sense. And a discounted cash flow model, a DCF, which you'd normally use to project future cash flows. Also highly impractical here. Why? Because those future cash flows are directly tied to the highly volatile, highly unpredictable price and yield of their e-holdings. There's just way too much uncertainty in the underlying asset's price to build any kind of reliable DCF. If you were going to attempt any kind of relative valuation, you need to compare Sharplink not to gaming or tech firms, but to other ETH proxy vehicles, things like spot ETH ETFs, if they get approved, or maybe investment trusts holding Ethereum. But benchmarking is tricky because there aren't that many direct public comparisons like this yet. We're kind of in uncharted waters valuing something this distinct.
It definitely sounds like a company that would see a lot of ups and downs, a lot of volatility, given that direct crypto exposure. What's the recent price action and the general market sentiment telling us? How are investors actually reacting?
Well, fascinating is one word for it. Sharplink Gaming has shown extraordinary volatility, perfectly mirroring its new identity. Just looking at August 2025, its trading range was wild. It swung from the low $15 up to above $20 per share, and those swings almost directly mirrored the ETH's spot price movements. If you look at technical charts, you see key support levels around $14, $16 and resistance up at $22, $24, lining up pretty neatly with major ETH price swings. It's not just correlation, it's almost like a direct reflection. Shows the market clearly sees it as a pure play on Ethereum.
And outside of the price charts, what about headlines? What are people saying? Is the market fully on board with this transformation, or is there still maybe some confusion out there?
Recent news, especially in August 2025, really hammered home the story. Confirmed the increased ETH holdings, confirmed the $360.9 million equity raise. It all reinforces this ETH accumulation strategy. Back in June 2025, public disclosures already outlined the ETH reserves as a core treasury asset, sort of cementing this new direction. Something interesting is you don't see major analyst ratings from the big Wall Street firms. Covers is mostly coming from smaller boutique analysts who specialize in crypto. That tells you where the perceived expertise lies for this kind of company. We also saw a notable insider sale back on August 18th, 2025, by 18,334 shares sold at $19.16. That always raises eyebrows, though, it could be for many personal reasons, social media. Sentiment is definitely mixed, but it's very energized. Lots of focus on Sharplink, purely as the direct, publicly traded way to get ETH exposure. The conversation really isn't about their old gaming business anymore. It's all Ethereum, all the time.
Okay, so for anyone looking at this company, maybe they're intrigued by that pure ETH angle, but also a bit nervous about how unconventional it is. What are the potential catalysts, things that could really move the stock? And crucially, what are the big risks you absolutely have to be aware of?
Right. For short-term catalysts, you really need to watch anything significant happening with ETH itself. So think about developments like progress on a spot ETH ETF. That would be huge. Major Ethereum protocol upgrades, shifts in macro sentiment towards digital assets generally. All of that will directly hit Sharplink's stock. Also, the next quarterly earnings report, probably around November 2025, that'll be key. It should give updated ETH positions and maybe some new info on their yield strategy long-term. Things like regulatory clarity, maybe changes in how public companies can hold and report digital assets. That could be a tailwind. And of course, the overall growth of the Ethereum ecosystem itself, more institutional adoption that's fundamental to Sharplink's value proposition. Broader ETH acceptance directly lifts their boat.
That makes sense. But it also raises a really important question. With such an incredibly concentrated strategy and all the volatility we know crypto has, what are the main risk factors an investor absolutely has to grapple with before jumping in?
The biggest risk, and it's spelled out clearly in their recent 10K filing, is just extreme concentration in ETH, period. This exposes the company, lock, stock, and barrel, to crypto asset volatility. Any major downturn in crypto, or specifically in Ethereum, will have a direct, probably severe impact on Sharplink's balance sheet and its stock price. This isn't diversified at all. It's one single, very focused bet. Then there's the risk of shareholder dilution, significant dilution, potentially, because they keep needing to raise capital through equity offerings to fund these ETH purchases. Each time they do that, existing shareholders own a slightly smaller piece of the company, which could eat into gains from ETH going up. Regulatory uncertainty around digital assets is another critical one. It's always hanging out there. A sudden shift in government policy or financial regulation that could have huge implications. And finally, you have broader market risks. General crypto market declines, plus just the inherent lack of diversification compared to, say, a traditional gaming ETF or peers holding multiple assets. You're basically taking on all the risks of Ethereum, plus the operational risks of being a public company.
Okay, given all of that, the huge pivot, the unusual financials, the valuation challenges, the direct ETH link, and these significant risks, how do you sort of summarize the investment thesis for Sharplink Gaming? Is it this bold new frontier or more like a financial tightrope walk?
Well, our overall rating for Sharplink Gaming comes in at a 4 out of 10. The thinking is, well, yes, it definitely offers this pure play exposure to ETH through a public stock, which is unique. This radical business model shift just means traditional fundamentals and valuation metrics don't really work anymore. The upside potential is almost entirely dominated by speculation on the price of ETH and whatever yield they can generate from their treasury. It's basically a highly leveraged bet on Ethereum. But the downside is very significant. You've got extreme crypto volatility, then ongoing regulatory uncertainty, and the constant risk of shareholder dilution. It's like trying to, I don't know, navigate a ship where the sails are pure ambition, but the sea is always stormy.
So it really sounds like this is definitely not for every investor then, and probably not something for a big chunk of a typical balanced portfolio.
Precisely. Yeah, we really view this as an aggressive, highly speculative allocation. It's certainly not what we'd call a sound long-term investment for most portfolios that are looking for stability or, predictable growth. It feels much more appropriate for perhaps short-term trading by sophisticated speculators, people who really understand crypto price dynamics, event-driven volatility, that sort of thing. Not really suited for a typical long-term investment horizon. For the average investor, the level of concentration risk and the inherent volatility just make it a very high-risk proposition. You really need to be able to stomach potentially huge swings and have a very strong conviction about the future of Ethereum itself, understanding that this company is almost purely just a vehicle for expressing that conviction.
What an insightful look into Sharplink Gaming. It really does show how some companies are adapting, maybe even transforming, in response to these new financial landscapes, creating entirely new and often challenging categories of investment. It's a truly fascinating case study in how fast corporate identity can shift in this digital age.
Yeah, the Sharplink story absolutely pushes the boundaries of what we think of as corporate identity and how we value companies. It definitely leaves us with a profound thought, doesn't it? If more publicly traded companies start becoming these large-scale digital asset treasuries, are we actually witnessing the birth of a whole new asset class of public equities? And how do our traditional regulatory frameworks, our investor expectations, how do they need to adapt to this evolving reality? What new metrics would we even need to really understand their value beyond just tracking the underlying asset?
Definitely something to ponder as the financial world continues its rapid and sometimes unpredictable evolution. Thank you for joining us on Investing Talk podcast. We hope this exploration of Sharplink Gaming has given you some valuable perspective, whether you're deep into crypto already or just curious about where traditional markets and digital assets might intersect. We look forward to having you with us next time.